Hey guys, welcome back to my YouTube channel. How are you all doing? I hope you've been having a great year so far. Sorry I haven't been able to post over the last few months because I've been extremely busy and a lot of things just happening. But I'm back now. Hopefully I can post more frequently and more analysis videos for you guys. In today's video, I want to quickly go through the four major pairs. That is gold, Euro USD, GBP USD, and GBP JPY. And as always, I'm going to start up with gold from the weekly time frame and work my way down to the 4-hour time frame. So now with the gold on the weekly time frame, we can see that price has gotten to this resistance area over here around the 2050 area, right? So 2050 area, which is like a key area of resistance that price has gotten to. And when price got there, you can see it rejecting off. And even if you move it slightly to the left, we can see that that area was tested previously as well. So we can see that that's a key area. And immediately price got there, you can see it retracing back down below 2000 level. And now price currently sitting around the 1990 area. And you can see as well on the weekly time frame these three candlesticks here. That's this one, this bullish candle, followed by this doji candle, and then this bearish candle. This three candle is what we call an evening star, which normally when we see that, we say it's a reversal candlestick pattern. And following that, we can also see that the last week candle also ended in this sort of bearish pin bar pattern. So looking at this shows that price mostly seems to be going towards the downside, towards the bearish move. So from the weekly time, what we're seeing is price potentially retracing back down to the downside. Now, if we go to the daily time frame, we can see on the daily time frame that price has been ranging quite a bit. You know, between, I would say, this area here, right, which is around the 2013 area, and then this area below as well, just around here, I would say, or maybe just a little bit down. Yeah, just around this area here. Yeah, so around the 1980 area as well. So prices really failed to break below or above this level, and that's where price is ranging currently. And when we go down to the 4-hour time frame where we normally take our entry, we'll have a closer look at that. Okay, now looking at the daily time frame, you can see that when price got into that zone there, you can see the engulfing candle that price formed. Okay, so price got up there, formed this lovely engulfing candle, came back down, and then has now been ranging between these two areas. Okay, so what could happen here is either price breaking back above this area and continuing to the upside back into this area to test it, or price could break below that area, quick retest, and then continue down towards this next support area, which will be around the 1936 level. All right, so those are the two possibilities that we are seeing at the moment on the daily time frame. Now, if we move straight down to the 4-hour time frame, take all this out. So on the 4-hour time frame, as we can see, we are still in the range. We can see price testing this area multiple times, and we can see the rejection every time price gets into that area. It rejects to the upside, and it's done that about 4 or 5 times now. And what's happening now is price possibly going again to retest this resistance area there. That's around the 2011 area. Okay, so what we can trade this in two ways. Okay, and normally I like to go for the more conservative option, just so that you don't blow your account, especially if you have a small account and if you're a swing trader like me. We just need to be very patient and then wait to see what happens. So for me, the way I'm going to trade this setup will be not trading the range. Okay. Okay, or I can either decide to trade the range or not trade the range. It all depends on you. For me, the safer option is to wait for the potential breakout out of this range. Okay, and with this sort of range as well, normally what usually happens is there would be a lot of fake outs. So you have to be extremely careful. Fake out being price going to the upside, breaking this area, right? And when it comes back to retest, rather than retesting the area to move to the upside, it goes back into the range and then continues to the downside. Okay, and so this area here is what we call the fake out area. All right, and that's what you have to be careful of. Normally, the market players would do this to take people out of their stop loss, and it's more or less stop hunting and then going back into the area. And using multiple time frames sometimes can help with that, to prevent that as well. So if you go to a higher time frame, you would see probably that the candle is coming back down and closing below that area. So that's why if there is a breakout out of this zone, whether to the downside or to the upside, we have to ensure that we wait for a retest to happen before we take the trade. So if price continues to the upside, for example, and price breaks this area, we'll wait for price to retest this area, give us a bullish candlestick pattern, give us a bullish signal here. Okay, and when we're trading, we're not just using the candlestick patterns, we're using it with other confluences as well. So we're trading in relation to this broken resistance area. We're trading in relation to using a sort of momentum indicator or an oscillator indicator like MACD or RSI or stochastic indicator. All right, so once price gets there and gives us a bullish signal, a bullish candlestick, say an engulfing candle or a bullish pin bar, then we'll be looking to take our buy trade back into the 2050 area. On the other hand, if price breaks this area to the downside, then we'll wait for the retest and wait for price to give us a bullish signal before taking it to the downside. So being conservative, I think this is the best way to approach the market. It may take a little while for price to break the area, but once price does that and we're able to take our trade, say for example from here to the upside, we're looking at around 300 pips or 350 pips, which will be very profitable depending on your lot size. And if you're taking it to the downside as well, then you're looking at around 350 pips as well, or around 400 pips for that particular trade. Again, which is a very good risk reward ratio, a very good trade, and a very conservative one, preventing you from losing a lot of money. So basically, this is my analysis for gold. I am going to wait for price to get to this resistance area and see what happens. Wait for either to break or to see if price would reverse from there. But generally speaking, I would advise that you wait for a breakout from this range before trading. On the other hand, if you're not new to the market, if you know you can't trade the range, you can always do that anytime price gets to either the resistance area or the support area and gives us a reversal candlestick. You can always take your trade it to the upside, and when price gets to the resistance, you can look for the reversal there as well and trade it to the downside. But then again, there's always that risk that price could quickly swing out and break through those key points. So this is my analysis for gold. Next, I'm going to look at Euro USD. And again, I'll start up with the weekly time frame and work my way down to the 4-hour time frame. All right. So now on the weekly time frame, we can see that generally speaking, looking at the trend where it is now, the price has been moving to the upside, right? And then we can see that when price got to this area here, there's this level here, that even though there were some wicks above that area, price never closed above that level, and that is the 1.105 area. Price never closed above that area, but wicked through on occasions, and now that's where price is wicking through now. So price has tested that area, and that's what we're looking at, still with price going to the upside. Although from the last last weekly candle that was formed, we can see with this long wick forming, it shows that even though buyers were trying to push price up, there were just about enough sellers to push price back down below that 1.056 area. Now, if we move to the daily time frame, we can see that I have drawn this sort of ascending channel where price has been moving through. We can see that price testing that several times, okay, to the top side, came down here and then has formed this sort of pin back candle there again, and possibly price moving to the upside. Okay, so this is what I am basically looking at for Euro USD. That is the bigger picture, I would say, for Euro USD at the moment. And so I'm expecting that price could possibly bounce from this lower lower line of the channel and then get all the way to the upper line of the channel, okay, before giving us any further moves. And on the other hand, price could as well break this lower channel to the downside and then continue all the way down. That's also a possibility, and that we have to be aware of that. If we go to the 4-hour time frame, so basically this is the 4-hour time frame, and again it still follows the channel that I mentioned. And the reason why I was in support of price bouncing from this lower channel to the upside again is this candlestick that has been formed. Yeah, that is, you're looking at this 1, 2, and 3. So this bearish candle followed by this sort of doji candle slash pin back candle, followed by this large bullish candle, is what we call a morning star, and this is a reversal pattern. And this happening on a significant level such as this, the lower level of the channel, could possibly indicate price moving to the upside. Okay, so that's what I'm looking at basically. All right, this key area here which price has formed. So one of two things: you can either decide to take this trade as it is at the moment, because price is moving down a bit, which we normally expect it to. Put a stop loss just below this area here, and then you take profit at the top of the channel. All right, and then quite a good risk to reward ratio, could possibly give you 3:1 risk to reward ratio if you trade this. But then again, you have to be careful because, like I said, with the market, anything can happen. Price can either come down and break through this area here, retest it, and then just continue to the downside. So that's something that we have to be at the back of our mind. But what we are looking at now, and based on what the market has given us, I am expecting price at least to move up a little bit to the top of the channel, and so that's what we will be looking for in the upcoming week. Again, you can be a bit conservative or you can decide to trade this and then still enter more positions, and then we'll do that by looking at this area here. Okay, so looking at that area, we can see that it is an area of resistance that price has failed to break above. So to know that price will continue to the upside. If this level, if this area eventually breaks, that's the 1.106 area, 1.107 area, eventually breaks to the top and price comes back to retest it, you can always enter more positions here. Or if this is the first time entering this trade, that is if you've missed this initial one, you can always take your trade here and then trade it to the top as well. So that is also another opportunity that I can see that price would be giving us in the market. So this, of course, with what we've seen so far, very good opportunities to capitalize on. So one, you can either take your price from here, okay, or you can wait and then wait for price to break this resistance area, come back to retest it, and then take your buy trades from there. Either way, they're all very good opportunities. All you just need to ensure is proper risk management, and hopefully the price should go in the direction that we want it to. So that's my analysis for Euro USD. Next, I'm going to move to GBP USD. Again, from the weekly time frame, and then work our way down to the 4-hour time frame. All right, so I'm just going to identify this area here. That's a key area of support there. That's the 1.263 area thereabout. And that's where I'm seeing price heading to. And then when price gets there, we'll see how price reacts eventually. So looking at GBP USD, we can see price has gradually been moving to the upside. And if we go down to the daily time frame, just like with gold and GBP and then Euro USD, we can see price ranging in this channel. Okay, we can see price ranging there, came back up, came down, and then has now broken the top of this channel. Okay, so that is what we are looking at now, and we can see that the last candle to break, it was quite a strong daily candle that broke through that area. And so because of how strong this candle that broke through this area is, it for me, it shows that price most likely will continue to the top side, at least up to the 1.265 area. Okay, so on the 4-hour time frame where we normally take our entry, we can see the 4-hour candle that broke through, very strong candle. So one of two things, although the area that we are targeting here is quite a small area, but I am expecting price to continue to that upside. So one of two things can happen. One, price coming back down into this area to retest it, giving us a bullish pattern and then continue to the upside, or price just continues to the upside. Okay, so but I am expecting price to retrace a bit back into this area, and the reason why I would wait for price to to go into this area before taking this trade is if I decide to rush into this trade, right, and I am targeting the 1.264 area, my risk to reward ratio isn't a very good one. Okay, so if I enter here and I put my stop loss down here, my take profit up there, it's just about about a 1:1 risk to reward ratio, which for me, I don't think it's worth risking taking that trade from there. So what I would do normally is I would wait for price to retest. So even if price continues to the upside and doesn't retest this area, that's fine. That trade is gone. I'll look for more opportunities when price gets into this area here. Because when you move all the way to the left, we can see that that's another sort of area that we need to be to turn our focus to. So even if I do this, yeah, so it's an area that we need to turn our focus to, basically. All right. But for now, so that's price entering into this zone. But for now, I wouldn't rush to do that. What I would do is I would wait for the retest So price to get back into this area, give me a buy signal, then I will take my trade to the upside. And the reason why I'm waiting is if you take your trades from here, you put your stop loss just below there or sometimes below this area, right? And take it into there. You have a better risk to reward ratio, 2:1 risk to reward ratio, which is way better than the 1:1 risk to reward ratio as well. Again, the reason why we are waiting for the bullish signal for price to give us the bullish signal when price gets into this area is to avoid the fake outs, because price could as well just come back into the zone, right, and then continue to the downside, and then you now be caught in this trap of a fake out that I mentioned earlier. Okay, so again, for GBP USD, that's what I'm looking at. As price is broken out of this range, I will be waiting for a retest of that area. I'm not going to rush and enter into the buy trade there, because for me it's a bit, the risk to reward ratio is not very good taking my buy trades from there. So wait for the retest, and once price is able to retest that area, then we look for opportunities down here in the 1.25 2 area. If not, then we'll just wait for price to get into the 1.265 area and see how price reacts to that level. So that's my trade for GBP USD. And lastly, we're going to look at GBP JPY. And with GBP JPY, you can see how strongly bullish price has been. Price has now got into this resistance area, and this is what I'm just looking to see how price reacts to this resistance area, if price is going to break it or if price would bounce to the downside. So we can see the daily candle, the Friday candle was quite bullish, how strong it was. And now that we've gotten here, all we need to do is just wait for to see how price reacts. If price breaks that area and continues to the upside, or if price would form a reversal candle, and then we can take our sell trade from there. Okay, so if price breaks through, of course, we know we'll have to wait for our retest of that area and then take our buy trade to the top. If price gives us a bullish signal here, a bearish signal, sorry, we can take our sell trade to the downside. So again, we're just at a key area, and all we have to do for GBP JPY is just to wait to see how price reacts to that area, and hopefully we'll be able to take our trades, from there, able to capitalize on the market. So basically, this has been my analysis for the 4 major pairs. I hope you found this video very helpful. If you have, kindly leave a like. If you haven't subscribed, kindly subscribe to the channel for more analysis videos. Thank you very much. And once again, I apologize for not uploading for a long time. Have a fantastic week ahead, and cheers.
You know just what you do to me. Play my emotions like a pair of puppet strings.